What's up, guys? It's John. Just want to chat for a second about the Federal Reserve meeting today. So today while I was at work, I had Federal Reserve meeting just playing in the background. And one thing to note is today, as expected, interest rates were raised by 25 basis points. So before the meeting, the target rate for the Federal Reserve interest rates were 4.75 to 5.0%. Now, after 25 basis point increase, they are 5.0 to 5.25%. And just as a little heads up, a basis point is just a piece of 100. A basis point is a piece of a percentage point. So every 100 basis points represents 1%. The reason they have it this way is because just for easy numbers, say, again, just easy numbers, say interest rates were 10%, and they say we are increasing rates by 10%. Would that mean 10.1% is the new rate or 20%? So it's the whole issue of, are we increasing it and multiplying by this amount as a percentage, or are we slapping it on top? So basis point just makes it simple addition as opposed to creating a little bit of confusion as far as what changes are. So 100 basis points equals 1 percentage point. When we're talking about basis points, we're talking about adding or subtracting as opposed to multiplying. So for the meeting today, again, raised by 25 basis points, and it was discussed that this might be the last time they raise rates. Now, of course, to make their decisions in the future, they will judge it based off of data that they gather. However, it is looking pretty likely that they might just pause at rates here. Something we heard in previous meetings were that the Federal Reserve was working to raise rates to where they would be sufficiently restrictive to eventually bring inflation back down to their target rate of 2%. So while they may not raise rates again, which again they might depending on data, but while they may not raise them again, they might let them sit pretty high for some time. And again, it's all just based on data, and only time will tell, but that's what it's looking like right now. So I thought that was interesting. Another thing I wanted to bring up that a lot of people that don't pay too much attention to the Federal Reserve is that they have two main objectives. One of them is to maintain price stability. So in that case, we've had a lot of inflation, and they're really trying to fight inflation and bring that way back down to the target rate of 2%. The other objective is to maintain high levels of employment. So while really the main two tools that they have for tackling these two main objectives are one, moving interest rates, and two, dealing with monetary supply. So they can buy financial assets to boost those levels, which that would be called quantitative easing. It would be easing economic conditions. And the other example is things like selling financial assets and selling bonds and reducing the Federal Reserve balance sheet, which then tightens economic conditions as there is more supply, and it loosens, it decreases demand that is artificially pumped by the Federal Reserve. So hopefully that made a little bit of sense. I thought it was interesting that rates may not go up again. It was expected that they would go up 25 basis points at this meeting. And now we're sitting at 5 to 5.25% for the federal funds rate. If you guys have any questions or want anything covered, make sure to let me know, and see you guys in the next one.